all the future forward-looking indicators all bottomed. Global liquidity, global financial conditions, they all bottomed last year. And the market's priced in a recession then. We've still got markets that are cyclical pricing in a recession now, stuff like the Russell 2000, oil markets, commodity stuff. But really all the forward-looking stuff priced it in a while ago, and it's been following financial conditions on a forward-looking basis. From all of the work that I do, I see nothing but stimulus coming this year. To Tim's point, there's, stimulus is another word for debasement of currency, and they do it in a number of different ways. The worst one is the printing of money and putting it on the central bank balance sheet, using the balance sheet to buy debt, because what you're really doing then is pure debasement of currency, and most people don't understand what it is. They don't understand the fact that their purchasing power in asset terms goes down. So assets optically go up in value because the purchasing power of the dollar versus scarce assets goes up. And, crypto has been the best horse in that race. Technology has been particularly good at offsetting it. If you divide the S&P by the central bank balance sheet, zero performance since 2008. Gold, zero. In fact, gold is negative. Real estate, zero. It's only NASDAQ, only technology, and crypto that's actually outperformed the debasement of currency. And crypto, again, is such a beautiful thing. This won't last forever, but it's a gift for us because you get 3 years where it's the best performing asset on earth. That's through macro crypto spring, summer, fall. Crypto macro winter, when the downside of the debt refi cycle comes, it's the worst performing asset price on earth. And we just keep repeating. The lows are higher. It's just an exponential, logarithmic trend that keeps going because of adoption. So the other thing to bear in mind about 2024, 2025 is, okay, we've now built the ETF, which I think of as a trade deal between crypto land and fiat world. It's not immigration into crypto land because these people are using centralized counterparts to do this, as opposed to myself, who will use my ledger device for self-storage. But we're going to bring a lot of FDI, foreign direct investment, and tourism income into crypto land. Huge amounts of it because of the stimulus and the fact that it's the best returning asset price on earth. So we've got that to also ignite this crypto economy. And so how I look at this is this cycle, as we go from 516 million wallets to, I think, 1 billion and beyond in this cycle alone, that it's going to be an everything, everywhere, all at once cycle. All of the kindling is in place. The banks, all the asset management firms are both investors, but are also building on blockchain rails. All of them. JP Morgan, Goldman, everybody are building on these rails. The big brands are building on the rails for Web3. We're seeing a lot of that already in sports teams, car companies, luxury brands. I think the breakthrough of Solana compressed NFTs, allowing for 1 million NFTs to be minted for $100, means that allows ticketing and other breakthroughs of what we can use NFTs for, because NFTs are not just PFPs and stuff like that. In addition, the ongoing rise of stablecoins. That's basically a tokenized euro-dollar market that allows somebody working in the rice fields in the Philippines to own dollars, which is impossible for them. And then just the ongoing adoption of crypto. So 87% of all world trade is in US dollars. Whether anybody likes it or not, the US dollar is the single most important monetary thing. And really, dollars, they're restricted in who can get access to them. So if you're in Argentina, you have a problem trying to get hold of enough dollars. If you are in most countries have capital restrictions if they've got a weak currency. And the rise of stable coins, it really shocked me because at first I just thought it was a liquid on-ramp and off-ramp into crypto. And I was speaking to some friends of mine in Singapore who run a big trading business there, QCP, and they said, no. Most of the business we see in stable coins is from corporates. I'm like, what? It's like, yeah, Indonesian corporates trading with Chinese corporates because they don't have the settlement costs. They've both got capital restrictions. It takes a while to put the applications through. They just use this. I'm like, really? You've got, don't forget, 2 gigantic economies where crypto is somewhat restricted right now. It'll reopen up, which is India and China, both 1.3, 1.4 billion people. Both have currency issues in their own rights. So you can only think that this tokenized eurodollar market, which is offshore dollar market, which is stablecoins, will keep growing. I'm a macro guy. I'm not running other people's money. Yes, I have an asset management firm that invests in digital asset hedge funds that runs a diverse portfolio of hedge funds because it's a fund of funds. But personally, when I see extraordinarily high quality risk return opportunities in an identifiable macro trend where I can build a investment framework, I tend to super concentrate. I don't really do, and I've tried it in the past, to try and own a broader diversified base of tokens. I just end up in my wallet that I don't care about. I like to really focus on what I'm doing. So my big focus for this cycle is Solana, and that's been for the last year. Obviously, I have a lot of ETH. I still have some Bitcoin, and then I have a few other tokens here and there. What I think is going to be the breakthrough for this cycle. And so, yeah, I'm not diversified at all. So I think inflation will continue to fall all year because I think structural issues within the economy, from aging populations to AI, will actually surprise people to the downside with inflation. So I'm not an inflation sticky person. There's different types of inflation, right? We're talking asset inflation caused by debasement of currency versus CPI inflation. In a election year, the government's job is to give out as much candy as possible to voters. All they want to do is buy votes. You will always get stimulus. Since 2008, we had a great reset of the debt markets. Every major government hit 100% of GDP in debt by 2008. That's the Europeans, the Brits, the Americans, Japanese, Chinese. And what they all did was cut rates to zero in 2008. That was essentially a debt jubilee. It's like you don't pay the interest on the debt. That's really what it was. So if you don't pay the interest on the debt, what did they do? They all refied all of their debt. So it's 100% of GDP in debt. So all economic growth essentially goes to paying off the interest payments on the debt. So what you need to do is lower the interest costs of the debt. They did that, and every government reset their debt to 3 to 5 year. That 3 to 5 year cycle is the debt refi cycle. It's exactly how the economy has been working. That 4-year cycle is exactly the same as the Bitcoin halving cycle. Why? Because Bitcoin came in 2008. It's also the same as the presidential election cycle. Why? Stimulus, right? They're all the same thing. So it is the most observable economic environment of my 30-odd year career. And it's so obvious what 2024 and 2025 are, and that's more stimulus. They're going to be cutting rates, but inflation does go up. They will use yield curve control, which is printing of money, to maintain interest rates, which Japan has been doing. But generally speaking, it's a year of stimulus. In a year of stimulus, as investors, we need to say, okay, what's going to create the biggest opportunity set? The multiplier on all of this is crypto.